So, nuclear energy powered by uranium is not only incredibly efficient, but also one of the most consistent and scalable sources of clean energy. Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast, coming to you from Montecito, California. And of course, it is Christmas week, so happy holidays. If you do have a minute that you're now on vacation, make sure you go to wealthformula.com. Sign up for some of our resources there, including an opportunity to join us at the Accredited Investor Club at wealthformula.com. Of course, you do need to be accredited to join the Investor Club, which is basically saying that you make $200,000 per year or $300,000 per year if you are filing jointly for at least 2 years in a row. Reasonable expectation to continue to do so, or a net worth of $1 million outside of your personal residence. If you qualify, if you meet those criteria, I should say, you are accredited. You don't have to go sign up for something. There's not a test, whatever. Those are the rules. They're funny rules indeed, but those are the rules. If you are an accredited investor, make sure to go to wealthformula.com and sign up for our investor club and get onboarded so you can see some opportunities over the next year. I'll be curious to see what 2025 is all about. Artificial intelligence, of course, is hot right now, and we're going to probably see a lot more interesting things come out in that direction because, of course, it's not just a trend. This is not a trend, folks. It is a revolutionary force shaping industries, driving innovation, changing the way we live. As investors, we face critical challenges, right? How do we capitalize on this seismic shift without falling into the trap of picking winners and losers in an unpredictable landscape, right? History has shown us how tough it actually is, even though, there are these emerging technologies that people are going to make, they're going to make a lot of money on, but it's hard to know exactly how to do so. In the dot-com era, for example, people made lots and lots of money off of Amazon, off of Google. They were grand slams, but then there were also plenty of pets.coms along the way, these ideas or these companies that never really materialized into anything. Anyway, with AI, the stakes are even higher, really. I mean, we know the technology is real. We know it will grow exponentially. But again, betting on an individual company to, capitalize on the AI lottery is a challenge, right? So what we do know with certainty that AI, artificial intelligence, is absolutely an energy beast. It takes a lot of computing power, and the computing power required to train and run large AI models is staggering. That is only going to increase. And I've heard some, big players talk about this, including Eric Schmidt of Google. And, that's why I believe that one of the smartest ways, if you are thinking about trying to invest in AI, may not be through AI itself at all, AI stocks or whatever. It could actually be by focusing on the foundation AI cannot exist without, which is ultimately low-cost energy. Now, while solar, wind, and traditional energy sources, of course, are you're going to play a role, one energy source really stands out, is particularly intriguing, and you're starting to see it in the way that it's behaving in the markets, and that is uranium. So nuclear energy powered by uranium is not only incredibly efficient, but also one of the most consistent and scalable sources of clean energy. So as the demand for reliable energy surges to support this AI revolution, uranium could become sort of the unsung hero in the story, right? Sort of like the guys selling the food to the gold rush folks rather than the people looking for the gold. Anyway, to explore this idea more in depth, I recently sat down with an expert on uranium. We talked about the global energy landscape, why nuclear power is gaining so much traction as the world looks for low carbon solutions, and how uranium might play a critical role in fueling the next wave of technological innovation. So anyway, we will have that interview right after these messages.
Wealth Formula Banking is an ingenious concept powered by whole life insurance. But instead of acting just as a safety net, the strategy supercharges your investments. First, you create a personal financial reservoir that grows at a compounding interest rate, much higher than any bank savings account. As your money accumulates, you borrow from your own bank to invest in other cash-flowing investments. Here's the key. Even though you've borrowed money at a simple interest rate, your insurance company keeps paying you compound interest on that money, even though you've borrowed it. Net result, you make money in two places at the same time. That's why your investments get supercharged. This isn't a new technique. It's a refined strategy used by some of the wealthiest families in history, and it uses century-old, rock-solid insurance companies as its backbone. Turbocharge your investments. Visit wealthformulabanking.com. Again, that's wealthformulabanking.com.
Welcome back to the show, everyone. Today, my guest on Wealth Formula Podcast is Ben Feingold. Ben is the director at Ocean Wall Ltd. He's been with Ocean Wall since January of 2022 and has been the director since March of 24. He's an expert in commodities research with a particular focus on the uranium and nuclear sector. He's become a recognized voice in the industry, providing in-depth analysis on market dynamics, geopolitical impacts, and the investment opportunities in the uranium market. Welcome to the show, Ben.
Thanks for having me, Buck.
Let's kind of, this is a topic I've been wanting to talk about lately, and I've sort of, mentioned it periodically over the past several months about an area that I think is going to continue to drive forward over the next several years. So tell me from your perspective, what is going on? So first of all, maybe what's going on with the uranium market, maybe compared to what was happening with it 2 years ago, and why?
Sure. So I think, the nuclear industry, when I first sort of started to look at it about 6 years ago, the first thing that I was told was that things tend to move at quite a glacial pace in the nuclear industry. And I therefore thought quite stupidly that the same therefore applied to the one commodity that was needed or was really integral to running nuclear power plants, which was uranium. And that was really, the opposite, the complete opposite is true. Things move in uranium incredibly quickly. We saw that happen in sort of 2007, where you saw a 7 times price increase in the space of about a year. So things can move very quickly in uranium. So when you talk about 2 years, really a lot has happened in that last 2 years, both in terms of the underlying price action, but also just in terms of the news flow within the nuclear sector and how that's obviously affected uranium. So if we go back 2 years, really pretty much 2.5 years, let's say, when Russia invaded Ukraine, was probably one of the most significant events in the nuclear fuel cycle since, really 2007, definitely, but really in its history. This is primarily because Russia have pretty much a monopoly on refinement, or what's known as conversion and enrichment in the nuclear fuel cycle. So the Russia's invasion of Ukraine has had really profound, a very profound impact on nuclear fuel markets. So I would say that's been the sort of key impact over the last 2 years, and we can definitely talk about the specifics of that. In terms of price action, we've seen prices in the last 2 years go for around $40 a pound. When we talk about uranium weight, we don't talk kilos or tons really, we tend to talk pounds in weight. So the uranium prices have gone from sort of 40 to about 80. There's sort of been some volatility along the way, both to the up and down side. We saw uranium prices top out at about $106 a pound in January of this year, and they sit just below $80 a pound today. In terms of, what's happened in the last 2 years, a lot. But if maybe we just talk about this year specifically.
Let's kind of break it down a little bit, because this is a topic that not a lot of people know very much about at all, right? It's sort of, what are we talking about here? Why are we talking about uranium? That kind of thing. So, let's break it down. First of all, why the interest in nuclear right now? Maybe that's a good place to start.
Sure. So, the interest in nuclear really comes from its two main key attributes, which are that it's baseload, i.e. it's non-intermittent. Capacity factors can be 95+%, and also it's clean. And there are very, very few, really only one or two other clean energy sources that have capacity factors of, as I say, sort of 90+%. So, what drove our interest in uranium, and I think what's driven the uranium price over the past few years has been this global nuclear renaissance, which is an acceptance that nuclear power and the characteristics that come with it are incredibly powerful for society today, particularly, corporates, especially big tech companies with these large ESG goals who have got these incredibly power hungry data centers. I think that's been one of the main drivers this year.
Yeah. I mean, that's kind of one of my, one of the reasons why I personally all of a sudden felt like this is something we need to talk about, because as you look at artificial intelligence in particular, these types of technologies take enormous amounts of energy. You can either invest in artificial intelligence, you're going to invest in what's going to drive the fuel for this, and that's where nuclear, I think, potentially has a real potential. So beyond just that sort of my speculative thought there, what are we seeing on the ground? As a matter of fact, that we can see moving in that direction.
So you have 440 operating nuclear reactors in the world today. You see various different supply demand sort of forecasts. But what you're going to see in the next few years is an evolution of traditional new builds, i.e. these very large scale 1 gigawatt reactors, but also the sort of real future of nuclear power is these much smaller reactors. So applying production line economics like Henry Ford did to the Ford Model T, but applying that to nuclear power plants. One of the main issues that people have had historically with nuclear has been the fact that build times are very slow, it costs a lot of money, and they run over time in terms of construction time. So the advent of these smaller, more sort of scalable, repeatable designs are something that's really going to change over the next few years. I mean, you see bipartisan support for nuclear in the Senate. You see even historically some of the most anti-nuclear jurisdictions in the world, the home of Fukushima, Japan, are looking to restart tens of reactors over the coming decades. China is building more nuclear reactors in the next 15 years than have been built globally in the last 35 years. India wants to increase nuclear capacity tenfold. It's becoming quite ingrained now in sort of at a sovereign level in terms of the sovereign energy strategies, but also, public opinion towards nuclear has really improved over the past few years.
Is that public opinion regarding safety warranted in the sense that, listen, I think nuclear probably would be a lot farther along if not for Chernobyl, 3 Mile Island years ago, and Fukushima, right? So people have an underlying fear of these things, and frankly, they're probably warranted fears. How do these smaller modular nuclear reactors, or if that's what they're called, how do they mitigate some of those risks?
I mean, there's various parts of the design process for small modular that, really improve safety inherently. I mean, these things are designed now for sort of air crash scenarios. They're designed for earthquake scenarios. I think what's important to understand with nuclear is that it's an energy source that definitely deserves respect in terms of its capacity to potentially be very, very hazardous to even sort of far-reaching populations from where the plants are located. But the small modular reactors, these things have got improved trigger mechanisms that allow them to shut down very, very quickly. They actually require refueling a lot less often, which is another point of contention, perhaps with larger reactors. But also really just their size. I mean, the energy density of these reactors, the fact that you're able to make them so much smaller means that they're much more energy dense. They require a different type of fuel as well, a lot less fuel, albeit it's a much higher enrichment level, the fuel. But all round, small modular is not just aimed at improving safety, but as I mentioned, sort of scalability and the ability to roll these out at scale.
When you say small, how small are we talking? I mean, are we talking about something you put on top of a data center? Like, like an air conditioning unit? Or, I mean, what do these things look like?
So small modular can really vary from sort of 15 megawatts, which can be, think about it as the size of a house, maybe a bit bigger. I call it a big house. And then you have your Rolls-Royce, SMRs, which are, built on they're still built on sort of a 10-acre site. So really very varying designs, but think about a large-scale gigawatt nuclear power plant as requiring sort of many hundreds of acres, 300-400 acres at a time.
All right, so we established, I guess, what the what the potential driving force is in terms of market forces. We have a way to move forward potentially. So beyond that, Kazakhstan is the largest producer of uranium, as I understand it. How does market dominance by Kazakhstan impact the stability and pricing of uranium?
So Kazakhstan represents about 40, 42, 43% of global supply. It's pretty much a monopolistic producer. Think about it as sort of OPEC plus in terms of the oil market, or sort of the Saudis times four. They really do have a very tight grip on uranium supply. What's interesting here, and is particularly relevant for the West, is that they share two very important neighbors, China to the east and Russia to the north. China, as I mentioned, have this very aggressive nuclear rollout strategy, so they're trying to procure as much fuel as possible. Russia is the exact same because, as I mentioned, they have this dominance in refinement. They need to feed the uranium out the ground into these refining processes in order to turn it into serviceable nuclear fuel. The reason this is so important is because what is now happening is about 70 plus % of sales coming out of Kazakhstan, who, as I say, is over 40% of supply, are going to just these two countries. So you have an increasingly bifurcated market whereby the West in particular are falling quite short in terms of their supply. In the US, for example, the US nuclear fleet, all of the reactors in the US require about 45 to 50 million pounds of uranium per year. They only produced about 180,000 pounds in the first half of this year. So they're operating at they're only producing about 0.5% of their domestic needs. I've been out to Kazakhstan. My boss has also done a couple of trips out there as well. It's an amazing place, but I would say that where we are today is that you do have a sort of sphere of influence from the Russians in Kazakhstan for sure, and it's just a lot easier for them to ship these pounds, or not even ship the pounds, but to send them by rail to China, where there's actually a designated uranium storage warehouse just for U3O8, which is the sort of term used for uranium. It's much easier for them to send this material to these two countries versus having to ship it all the way over to the US. It's an incredibly complex transport route via something called the TITR, which is the Trans-Caspian International Route. It has to run through the Caspian, through Azerbaijan, through Georgia, down the Bosphorus, and across to the United States. So it's much easier for them to really just send this to their neighbors.
Yeah, sure. And so the U.S., you said, so the U.S., does it primarily produce its own uranium then? Are we getting, are we getting most of it from somewhere other than Kazakhstan, or what?
So in terms of U3O8, uranium out the ground, you import, the US imports sort of 99% of what it needs. There is some refinement capacity in the US in terms of conversion and enrichment, not enough to service the entire nuclear fleet. So the US relies on sort of Kazakhstan, Russia, and Uzbekistan for over 50% of their nuclear fuel. Consider the fact that the US, about 20% of the US is run on nuclear, so 1 in 5 households is run on fuel from those three countries. It does paint quite a stark picture for the US because, after Russia invaded Ukraine, pretty much every commodity coming out of Russia was being sanctioned. And they couldn't sanction uranium. Only this year did we see a ban on Russian uranium into the US, and that won't come into effect really until 2028. So it shows that sort of level of dependency that the US have on other countries, especially sort of non-allied nations.
And what's going on the geopolitical side of Kazakhstan? I have no idea, like who's in charge of Kazakhstan, what our relationship with Kazakhstan, what their relationships are with China and Russia, just so we get sort of a broader sense of that.
Mm-hmm. I mean, we often describe Kazakhstan as sort of the prettiest girl at the disco, in that, you've seen many visits from the likes of European leaders. You've seen Xi Jinping make his first visit post-COVID to Kazakhstan. President Putin makes regular trips there. They do have quite a broad they have a very broad allied network, I would say. They're definitely seen as allies to Russia, albeit I think that they've had a fairly muted response to Russia's invasion of Ukraine. I think that, the relationship with the Chinese is also quite apparent, but Kazakhstan is an incredibly mineral rich country, in terms of oil, in terms of natural gas. They are key exporters of fertilizer to the European Union, I think they're the fourth largest exporter of wheat to Europe as well. And as I mentioned, they have this real dominance in uranium supplies. So Kazakhstan geopolitically is, I would say, it's strategically imperative to quite a lot of countries around the world, in both the West and in the East. So the political landscape there is quite complex. President Tokayev is the current president in Kazakhstan. As I say, he has forged very strong relationships with Xi Jinping in China and President Putin. But as I say, he's also remained fairly on the fence, I would say, in terms of Russia's invasion of Ukraine.
Interesting about Kazakhstan. Kazakhstan's not considered a very rich country, though, is it? I mean, it's like, you think about like these mineral or resource rich places, like oil rich places like the Middle East. I mean, they're very wealthy countries. So is this just sort of because the renaissance of nuclear uranium is in its infancy, and Kazakhstan is about to explode? Is that, I mean, no pun intended there, but is that what's going? I mean, it's sort of an aside, but I'm curious,
I think that, it's a great question, because it's a trend that we've seen in particular this year, is Kazakhstan starting to take greater ownership and wanting to extract more value from its domestic resources. So take uranium, for example. They implemented a mineral extraction tax. There are quite a lot of JVs and Kazakh uranium mines, and they've now increased the level of taxable revenues that are coming out of these mines by about 3 times from next year.
Mm-hmm.
So I think they're starting to understand the value that they possess domestically, and I think that it's definitely not a poor country in terms of GDP per capita, but it's one of the largest countries in the world. If you look at Kazakhstan on a map, I think it's the second largest. It shares the second largest land border in the world, between Kazakhstan and Russia as well. But it's a country that I would not be surprised to see generate a lot more wealth over the coming years, given, as I mentioned, their sort of how important they are to a host of sovereign economies.
So I guess what you're saying a little bit is, they haven't really taken advantage of what they're sitting on as much, because they've essentially, the people who are getting that uranium out of the ground aren't necessarily Kazakhs. They're they're paying for time, but they're not paying for uranium. So
so they have a lot of joint venture interest in Kazakh mines. Russia has, I think, over 400 million pounds worth of subsurface interest in Kazakh uranium. The largest or the second largest listed uranium company, a company called Cameco, has a very large interest in a mine called Inkai in Kazakhstan as well. I don't think it's necessarily a case of that sort of they don't know what they have, but I think it's more a case of they're now at a place where globally they understand their significance, and they're going to start to really reap the reward of this amazing sort of mineral wealth that they have domestically.
Let's shift gears, I guess, just in terms of projections. Obviously, you're in the business of that, essentially, of trying to see where these things are going and investing in them. What kinds of projections do we have in terms of, the growth in the uranium market? And do we have any sort of projections on that you could cite?
So a very high level, the global nuclear fleet of 440 reactors require around about 195 million pounds of uranium per year, and global primary supply, so what's coming out of mines, is going to be about 150 million pounds this year. So we have about a sort of 25% deficit, about 50 million pounds per year. Our internal supply demand model shows a cumulative deficit of about £400 million between now and 2035. In terms of growth maybe we start on supply of uranium, there are sort of 4 or 5 projects coming online between now and 2030. As I'm sure many of your listeners will be aware, mining in any metal is very hard, but particularly in uranium, the average time that it takes to sort of license, permit, develop, and then start producing at these uranium mines in the West is over a decade. So I think what makes it a unique commodity story versus others is the lack of a supply side response and how long that takes. So in terms of growth on the supply side, maybe we see sort of between 20 and 30 million pounds of growth on the supply side over the next 5 years. On the demand side, and this is obviously driven by demand for nuclear power, we're definitely seeing, as I mentioned, a global nuclear renaissance. We saw another 8 countries at COP28 added to the other commitments to triple nuclear capacity by 2050. So there's now 31 countries in the world over the past 2 years who have pledged to triple nuclear capacity based off 2020 levels by 2050. Some of the names that I mentioned earlier, like Japan, the US, many countries within the EU, including the UK. There really are so few of these clean baseload powers at our disposal. So it does stand in a league of its own. If you look at Constellation Energy, one of the largest utilities in the US, they ran their nuclear fleet at a 98% capacity factor over the summer. Nothing else can really compete with that. It's baseload in its truest form.
Do you have a sense for what the incoming Trump administration's perspective on nuclear is versus, say, the previous administration?
So he's specifically pointed out a sort of pledge towards small modular reactors. There's been billions in funding already via both the IRA and specific grants towards advanced nuclear, specifically the fuel cycle, so uranium. Trump is definitely pro-nuclear. As I mentioned, there's bipartisan support in the Senate around nuclear. And I think that, the important thing under Trump, as many of your listeners will be aware, is this sort of domestication, and he has energy security really as policy number one in terms of being able to, they actually want to become net exporters of energy. So I think that in terms of what's at his disposal, in terms of base load, it's going to be nuclear and natural gas. But I can only see Trump being positive for nuclear power in the US.
What other countries outside of Kazakhstan? Is there anything that's, I guess, easier to get to get uranium from than Kazakhstan for the US?
Yeah, so Canada's the second largest supplier in the world. And the US already, I can't remember the exact figure. I think it's about 25% of their actual U3O8 imports are from Canada. But Canada's really not got that much capacity. As I mentioned, that large listed producer Cameco, they're pretty much sold out through the next sort of 3 to 5 years. So you need to see new mines developed, and the way to see that is much, much higher prices. When I first started to look at this space, the uranium price was $20 a pound, and it cost $50 to get it out the ground. Today at 80, it now, because of supply chain inflation and various other things, it now costs about $90 to $95 to get it out the ground, and over $100 for greenfield development. So there really is this sort of 3 to 5 year window, we think, where we will see much higher uranium prices. And I think what will come with that is the volatility that we saw in previous bull markets as well.
So what do you tell investors when they're looking at uranium right now? Like, what is the what message should people have when they start looking at uranium as a potential place to allocate?
So for us, the foundational belief in this space is a belief in nuclear power. I think that we're also all firm believers that we have these amazing energy solutions at our disposal. I think what makes uranium unique, and I guess is part of our job at Ocean Wall, is to make sure investors understand that everything that we talk about is backed by hundreds of, if not thousands of hours of research. But also, you have this amazing supply demand story in uranium that I don't think that you have, or I don't think you have to the same extent in other commodities. I think, as I said, as I mentioned, what makes it unique is that lack of a supply side response. Normally, if you see the oil price up $10, you'll see a supply side response, or you'll see an extra 1 million barrels a day pumped out of Saudi Arabia or out of the Gulf. In uranium, there is no uranium tap. And global inventories are pretty much at decade lows, both at the corporate level. So think about it as in terms of the producers, and also at the sort of government stockpiles as well. in terms of speaking to investors about this, it's about, I think spreading risk across various aspects of not only just uranium, but also nuclear as well. I mean, utilities have been a great place to be invested this year. The likes of Constellation, Vistra, a lot of the SMR companies as well have had great runs. So I think it's a sort of basket approach. But, for us, it's about telling investors that there's an amazing supply demand story here. You're investing in something that's clean, that's good for the planet. So I guess the thesis of do well by doing good comes to mind.
Sure, absolutely. Tell us a little bit more about Ocean Wall and what people can learn about Ocean Wall.
So Ocean Wall was founded, this is our 6th year now. As you mentioned, I joined, I'm going into my 4th year at the end of December. Ocean Wall are a niche alternative investment advisor based in London. We look at trades that are sort of a foot wide and a mile deep. We try and look for this maybe perhaps in the darker corners of the market where people aren't looking. So we were quite early into the uranium trade. We've also looked at other themes like Venezuelan bonds, understanding that Venezuelan bonds were about 18 months ago trading at artificially low levels because of geopolitical aspects, but also their oil industry had pretty much collapsed. We look at really the last year as well has been, we've looked at the geothermal industry a lot and advanced geothermal systems, specifically looking at companies that are able to extract geothermal from abandoned oil and gas wells. So I would say that we look at sort of special situation investment ideas. It can be public, it can be private, it can be via funds. But, we have a dedicated sort of research team, which I run. And then, what we always try and do is stay aligned to investors. So on any money that we raise for companies, we tend to take fees in stock so that we're completely aligned to investors for the duration of those investments.
So so you guys do both, as you mentioned. You're investing in public equities, but also in private placements and that kind of thing as well.
Yeah, exactly. We have quite a pretty flexible mandate in terms of thematically, but also the vehicles that we're able to present investors and invest in ourselves. But I think the thing that runs through everything that we do is highly researched, high conviction ideas that perhaps you wouldn't necessarily see from a typical sell side research house.
Yeah. Well, thanks so much, Ben. It's been a very useful conversation. The website is oceanwall.com. Is there any other direction in terms of how to reach out if people are interested?
Our Twitter is oceanwall2, and you can reach me, ben@oceanwall.com.
Fantastic. Thanks so much for being on the show.
No problem. Thanks for having me.
You make a lot of money, but are still worried about retirement. Maybe you didn't start earning until your 30s, and now you're trying to catch up. Meanwhile, you've got a mortgage, private school to pay for, and you feel like you're getting further and further behind. Now, good news, if you need to catch up on retirement, check out a program put out by some of the oldest and most prestigious life insurance companies in the world. It's called Wealth Accelerator, and it can help you amplify your returns quickly, protect your money from creditors, and provide financial protection to your family if something happens to you. The concepts here are used by some of the wealthiest families in the world, and there's no reason why they can't be used by you. Check it out for yourself by going to wealthformulabanking.com.
Welcome back to the show, everyone. Hope you enjoyed it. Again, I am obviously a real estate guy. Real estate has been a challenging space to be in for the last couple of years. And although I do think it's a great place to be looking into right now because it's been kicked around and it's, there's been a big, there's been a crash, right? The real estate crash really. And that's when you potentially really want to start buying. I mean, uranium's the same, by the way. Uranium was kicked around like crazy in the last, several years, and it's finally picked up. And, the moral of the story, again, is that there's always something on sale. Right now, uranium is something to think about because it's inevitable. There will be a need for low-cost energy. And this really is probably the easiest way to get that quickly. You see that with all these modular unit developments and all that as well. That's it for me this week on Wealth Formula Podcast. This is Buck Joffrey. Happy holidays. If you want to learn more, you can now get free access to our in-depth personal finance course featuring industry leaders like Tom Wheelwright and Ken McElroy. Visit wealthformularoadmap.com.